Hello and welcome to yet another video. So in this video, I'm going to be talking about how to trade the CPI candle, or more specifically, how you will have traded the CPI news release that happened on Tuesday in that past trading week. So before we get into all that, let me just put this disclaimer out there. This is not financial advice to advise you or to make you go into those markets and now start trading the news releases. If anything, you shouldn't be trading. This is my opinion, though. It is not advisable to trade the news release. Someone will ask me why. Because news has majorly two objectives. One, it is going to push price to an already existing bias or already existing objective. It is just going to be a catalyst. Yeah, the word is catalyst. It's just going to speed up that reaction because it's usually volatility. It's usually an injection of volatility. It's usually abnormal movement. It's usually so fast. So it's just going to be a catalyst to push price to an already existing objective. Like we had the CPI Tuesday. Another thing, the other function of news, it's going to be a manipulation. It's going to be something, it's going to be a release. The news will be released to act as manipulation because it's fast. So those are the two functions of news. One is going to be a catalyst to push price to an already existing bias or objective, and then the other one is just going to be a manipulation. So once you understand that these are the two functions of news, ideally I wouldn't advise anyone to trade the news release. It's my opinion again. Do people make money trading news releases? They do. So many people do. But that comes with experience, and again, it's something that is just, let me say, it's relative to a person and their personality. Personally, I do not trade news releases, and also I do not trade the day prior news releases. um when I say the day prior news releases, I mean the day prior high impact news releases, the big three, the FOMC, NFP, and CPI. I do not trade those news the day prior, and then as a general rule on Monday I do not trade. So most of the time you will not understand what news is going to do. So especially these high impact news events, the big three that I've mentioned, it's usually just an injection of volatility. It's always safer to like sit on your hands and wait for uh, the, the storm to pass or the dust to settle, and then now hunt for a setup after the release. So for this video, I'm going to be talking about that happened on Tuesday, and I'm going to um, shed more light on the two functions that uh, the news has. More specifically for this example, it's going to be where news will act as a catalyst to drive price to an already existing bias or objective. So this is going to be a rather short video, not that long. So I hope you'll enjoy it, and without any further ado, let's get into the charts. Now, before I even go into my trading view, my first stop is usually the Forex factory, where I want to check for what news events do we have going into that trading week. So for this week, we had CPI on Tuesday. So this is usually an unwritten rule for me. I have to start at the Forex factory first. I start there, then move on to my charts. So we had CPI on Tuesday, sorry. So this tells me that I am not supposed to be trading on Monday, and that is actually better because a general rule is I do not trade on Mondays. Then we had on Wednesday where we had no news. Then we had core PPI, unemployment claims, and then the other core retail, prelim UOM news. The others, these other news are not in the scope of relevance for me, so I'm just going to be looking for the big three. So now that I see that we have CPI on Tuesday, I now know that Monday automatically doesn't become it doesn't become a trading day for me automatically. So yeah, now that I have a roadmap, now I can move into my charts. So here is Nasdaq on a higher time frame. This is on a daily time frame. So I told you I usually begin from a daily time frame. So for this week it was a bit easier because I already had like a predetermined bias. Why? Because the previous weeks we were in a buy program. We had just closed above the 75 DRT level on that daily time frame, that daily um, market maker buy model. So this automatically tells me that most likely the major buy side liquidity that I marked last week's video is going to be my target or my objective. So at this point, all I'm looking for is a brief retracement and then change in state of delivery, then maybe look for a trade, then hunt for a setup there. So yeah, that is what you're going to get into. So this here becomes Monday's candle, and then this is Tuesday's candle. So by the looks of it, you already know that we took out the objective, and my prediction that we were going to get to buy side was actually correct. So yeah, I think that is pretty impressive. So now let's go get into an intermediate time frame like a 1 hour. So now we are here on a 1 hour time frame. I want to briefly take a minute or two to explain what is I have annotated here. So we have the major buy side liquidity over here, which is basically this high over here. So that is that major buy side. We have this dealing range from this low to this high. So this is a type 1 dealing range. We also have the levels 25, 50, 75. We also have this 1 hour fair value gap over here. And yeah, I have these lines over here annotated as Sunday 10, 25, 18. So this is Monday's price action from this line over here to this line. This is Monday. And then from this line to this line, this is Tuesday's price action. So now, given all that I have annotated here, what do I need to see? So I want you to keep this at the back of your mind. I already have a predetermined bullish bias, and my objective, is the major buy side liquidity at this point. So at this point, my work is 90% done. All I need to do is just sit on my hands and wait for setup. But one thing I should ask myself is, I already understand that we are above the 75 DRT line or the DRT level on a higher time frame over here. So again, it's a characteristic that price is going to mark time, or it's going to kind of like generate more buy side liquidity. What do I mean by generate more? It's more likely to consolidate above the 75 DRT level. That is it's characteristic of the algorithm once it gets to this level inside a buy program. So here we see it more clearly now. So if you look at Monday's price action between here and here, if you look at what we have here, this is literally us generating more buy side liquidity. Because we have all these equal highs, but then we sweep them, and then we have this high that was formed here. This again is this is generated buy side again, because we do not take the objective. So this high over here and the high that you have here on a daily time frame, these two become generated buy side or relative equal highs. So this becomes a very, very strong magnet where price is more likely to be drawn into. So this is confluence. You are aligning confluence. Let's study Monday's price action for a minute. So Monday opens. We have this is more of a consolidation type of price action, because as I've explained, we are above the 75 DRT line or the DRT level on a higher time frame. So we are more likely to consolidate or mark time. So now, at this point, we see that at this time over here, Monday, this candle sweeps all the buy side liquidity that we have over here. I wish I had annotated this, but it's okay. I'm going to take you through step by step. So now this candlestick here sweeps all this buy side, and then we close back below. So at this point, although I wasn't in the market at this point, I'm going to come into the market later on, maybe on Tuesday after the news release. But I can already tell, or I can understand, because remember, before you predict or before you even figure out what market wants to do next, you have to first of all understand what market has already done so that it gives you that information. So we sweep all that buy side, then you close back into the range. We displace all the way to the 1 hour fair value gap that you have here. We also have a 4 hour fair value gap here, but I marked the 1 hour because of something called order of time frames. So now, this here becomes what we call IRL to ERL, ERL to IRL. But more specifically for this example, it is ERL to IRL. We attack external range liquidity in form of equal highs, and then the most likely level that you are going to move to next is IRL, internal range liquidity, or we are going to seek to rebalance back to an inefficiency. Which or what inefficiency, or where is the inefficiency most likely nested? It is going to be nested at or below equilibrium of the dealing range between this low to this high over here. You also can plot it, the dealing range from this low over here, but for me, I'll use this low. So from this low to this high, this becomes our type 1 dealing range, where I want to see price now dip back into equilibrium or at equilibrium of the range, find some form of support, and then resume the buy program that it is supposed to be um, on. So before we go up, we have to go down. So this is that movement where we move now into the equilibrium range, where we come and rebalance this 1 hour fair value gap over here. We are also attacking all this generated sell side liquidity over here in form of uh, this trend line liquidity over here. This lows become sell side liquidity. So we are attacking also liquidity as we come into this 1 hour fair value gap over here. So I want you to notice where which sections of the fair value gap we respect. Notice the consequent encroachment, where we just tap and then just close back above. So this here is giving me information and it's telling me the body will tell the story, the wicks will do the damage. That is a popular ICT saying. So if I see that we are dipping into the fair value gap and then we are closing back above, this is giving me more information that we are more likely to seek buy side than we are more likely to seek sell side, because this is an inefficiency. Buy side imbalance, sell side inefficiency. But in simpler terms, this is a 1 hour fair value gap. So I am expecting that this will hold. Okay, so this becomes a key level that I want to see support price and offer support for me to um, even get more confidence that we are more likely to seek buy side. Now that we are here, the fair value gap consequent encroachment level is being respected very, very well. Another thing is the premium high. You see how we are also just touching and displacing and not displacing, but we are reacting from the premium high of the fair value gap. That is actually more and more information. That is more feedback. So realize how we do not get even a close below the premium high of that fair value gap. That is more information. So this tells me that this is most likely going to be a strong area of support, just to use that term. This is where I don't want to see price close below. So now this is Monday. Monday, we are done with Monday. Now Tuesday comes in. So if I am looking for price to seek buy side liquidity in form of all these generated highs over here and the major buy side liquidity over here, what first do I need to see before what will give me the confirmation that, okay, you know what, we have now switched gears from sell side to buy side on an intermediate time frame or on a lower time frame? If you guessed change in state of delivery, you are right. So I'm going to be looking for my change in state of delivery. But remember, we have news release on at 8:30, which I have annotated right here with this line. So this is the 8:30 news release. This is CPI. So before we get here, you see from this high to this low, What does this become? Because we've swept all this sell side, we've rebalanced this inefficiency. Although we did not rebalance we left a portion open that is actually more information. This becomes a type 2 dealing range, or in other words, this becomes a market maker buy model, or this becomes a market maker model where we have sell side of the curve, and then once that change in state of delivery happens, then that confirms that, okay, you know what, we have switched gears, we want to seek buy side. So that is what I'm looking for going into Tuesday. And here is what we here is where we get it. This is on a 15-minute time frame. You can also get it on a 30-minute. Those are the two ideal time frames to look for a change in state. Ideally the 30, 15, and sometimes the 1 hour. But the 1 hour sometimes usually a bit too much. So it's a bit too much of a higher time frame. So you need to play with the 30, 45, 15. So now this confirms to me that, you know what, we have switched gears. Now, before we get into this price action, you see how when Tuesday opens, we have all this is what you call barcode. This is barcode. Barcode, or this is, in short, this is consolidation, or this is just smart money holding price over here, waiting for the news release. This is characteristic again of, if you go back to your charts and analyze the price action, or the price action before a high impact news release, the big three, you'll realize that most of them, or a huge number or a big number of them, those sessions before, like the New York session, or Asia session, sorry, it's usually barcode, like it's usually consolidated, because that is where smart money are piling their positions, waiting for price, now the news to, you know, either manipulate or move the move, yeah, that's what I'm saying. So most of these news releases, those high impact news releases, the PA before the release is usually more of consolidated, but that consolidation can give you information like we did here. So now when we opened here, um this here is London. This is London's low. So of course, if I'm looking for a bullish day, I'm looking for that day to be bullish, I want to ideally see the low of day form during London, of which we kind of like did here, but again, you see we had SMT. So SMT is what I call, is what we is called, or is referred to as smart money time. So this is a form of manipulation. So this is where this is again the advice that you're told not to trade prior news releases comes in handy. Because if you would have thought that this was the low of day and then placed your stop loss just below here on a different like asset, like S&P 500, because this is the Nasdaq. So on S&P 500, this low was taken. So you see, this will have not been a safe place to have your stop loss. So it's always advisable not to trade before the news release. So back to the charts. I'm looking for a change in state, and I get it here. Why this series of down close candles? Because this low here on ES, we took the low over here. So this now becomes smart money time, or where we are forming a higher high on Nasdaq, and then on ES you're forming a lower low. So if we were to go on ES, the series of down close candles that took this low over here become the change in state of delivery. This just tells you we do not need to come back all the way to this low. So SMT is something that, again, I teach in my mentorship. So yeah, if you want to know more information about that, of course you can sign up for my mentorship. So now we get the change in state in delivery, but this is way even before the news release. So if I was to trade this movement, this would have been one of those days where you could have traded this movement because it has given you the change in state. But now the problem comes in, or the question is, where do you place your stop loss? Because you do not know if this news is going to be a manipulation to come and collect all this low, or all this sell side liquidity over here. You do not know. So this means that you're going to be trading this movement without a stop loss, and that is irresponsible trading. So it's ideal that you just sit on your hands and wait. So now you see, once we get the change in state, um, by the time we are getting to the 8:30 news release, we now get that big push. Where do we go to? Where do we go to? What is our destination? You remember the generated buy side liquidity? I think this was Monday's high over here. That is buy side liquidity. Number one, that is time based liquidity again. And then we have the major buy side liquidity at this point. So someone will ask me, did you trade this? Why didn't you um what was the reason why you did not take a trade? Here's why. Remember I told you that my objective was this major buy side liquidity from the word go. So this is where I want to see price at least. This was where I want to see the algorithm reprice to. So if the news has happened and then it has tagged or it has purged my objective, it has already met my objective. As a responsible trader, I am supposed to sit that one out. I'm just supposed to tell myself, you know what? Now you know my objective has been met. There's no way I could have traded the news release because it's not part of my rules. It's not part of my trading plan. So one, I have sat on my hands, followed my rules, and then um, my objective has been met. So at this point, I'm done for the day. Now I'm done. I cannot. I shouldn't be trading anymore. So this is the reason why I did not trade Tuesday setup. It was so clean. Again, we also had another setup over here, which I'll get into, but this was just it for me. Once we tagged that major buy side, I was done. Although it was a shallow tag, because this now again becomes kind of like this becomes more generated buy side because there's going to be so much buy stops over here. So this is going to be a prime area where price is going to revisit again, or the algorithm will revisit to as it performs its functions. So once we took major buy side, we had a brief retracement back into the range. If you measure from this range, from the low that was made from this low to this high, this becomes, you'll see that this is around 50 or just at the 25 DRT level between the low and the high. Again, we don't even need to measure that. If you can refer to these DRT levels on this, from this high to this low, you see where the 25 DRT level lies. See how price is reacting to it. What do we have at that 25 DRT level? We have this series of down close candles which become an order block, or in more, or to be more technical, they become the change in state of delivery. This low, I do not want to see price come and hold, come and attack, I mean. So this was again another very, very beautiful setup for someone to take. Why didn't I take this setup? Because my rules dictate that I need to see now the formation of another change in state of delivery for me now to enter into that trade. If you look at this movement over here, this just shows me that we had this down close candle over here. Once we close above it, now this becomes a valid change in state of delivery, or in other words, this becomes a propulsion block. See these down close candles, this become an order block. Once we move away and then we come back to retest that order block, the down close candles, the down close candle or candles that will be closed above after that movement become a propulsion block. So now this was a nice place to take an entry, but now my stop loss would have been so wide and the risk to reward would have been skewed. And again, remember, I do not know if this is where price wants to come back to, because we have already tagged the major buy side liquidity over here. So I do not know if we are going to reverse, if you are going to consolidate, or if you are going to retrace like we did and then resume with the buy side program. I did not know. You do not know sometimes, and it's okay. That is the point I'm trying to make. Sometimes you do not know what will happen, and it's okay. There's always going to be a setup for you in future. So that is how price action played out for Tuesday. Um, that was the trade. That was the setup. So if you saw this and then you took that trade, good for you. This was a nice setup. So this was one of those this is one of those functions that I highlighted where the news will act as a catalyst to drive price to an already existing um, objective or bias. Because this was literally this was where price was supposed to head to. It had no other place to move to. This was its objective. The algorithm was to reprice back to the high or the major buy side liquidity that was above all that, or um, above this high. This was the area it was supposed to go to. So, and we have confirmed that by looking at how it behaved around this 1 hour value gap, had the change in state, and so on and so forth. So that is it for this video. I hope you'll enjoy. I hope you learn something from it. Remember to like, subscribe, and turn on the notification bell on my YouTube channel. I'll be dropping this and more gems about dealing range and ICT concepts. So thank you so much for watching, and I'll see you in the next one. Peace.